Hey guys, Spartan here from SpartanTrading.com. I want to talk to you guys about a question I got a few times this week just because we've been trading them. What is a stock warrant? How do they work? When does it make sense to actually trade a warrant over the underlying stock? So what a stock warrant is, it's similar to an option in the way that it gives you the right to purchase a underlying stock or common at a certain price. So if the warrant, let's say, is, and let's just use an example here. If we're looking at something like BLNK, at the stock's at 1030, and the warrant is BLNKW in this case. I believe the warrant's at like $3.50, something like that. So it gives you the right to purchase the warrant at $3.50 upon expiration. So at 2023, if the warrant is in the money, so the common stock is above basically $3.50, you can purchase the warrant at that $3.50 purchase price, no matter where that stock is. Just like an option. The only difference between a warrant and an option is an agreement between two people, so you're purchasing off another person. A warrant is an agreement with the company. Usually warrants are longer dated than options. It's just how they work for the most part. Stocks or companies will issue warrants to raise capital, etc. So warrants, just another vehicle to trade. They trade a lot like equity, a lot different than options. Options are a little bit more sporadic. There's a lot of decay, like theta that affects it. The delta affects it. Vega, gamma. So they have the Greeks that affect the pricing of that option a lot more intensely than what a warrant basically is just going to be trading off the common, whatever the premium is associated between that warrant and the common stock. So the difference between that price is what that warrant is probably going to be trading at fair value for the most part. Sometimes you'll see warrants trading at discount, and it could be because there could be a large holder of the warrants using it to hedge maybe a common position. There's a lot of different reasons for that to happen, but typically they will trade at parity. So when we look at a warrant versus a common stock, what are some reasons to take the warrant over the common stock? Well, when you take a warrant, you have usually smaller amount of downside risk if you're going to be holding something for a longer period of time. Like you could hold BLNKW, 621 the warrant, that's what it's worth, or you could hold BLNK at 1023. Let's say for whatever reason the stock goes to zero, the warrant can only go down 630, the common stock can go down $10 from here. So that's one reason. Another reason is you can increase the amount of leverage you have on a position, right? If you had, let's say, $5,000 to buy a $10 stock, you can only take X amount of shares, right? But if you play the warrant at 630 or wherever it was at, you can take a little bit more shares because it's a cheaper way of owning that common stock. So that would be probably the main reason I would look at it. The risk reward would be the second reason for the longer period of time. But that's pretty much how warrants work. This is how I basically look at them from a risk reward perspective and leverage perspective, if I want to own them or not. But yeah, I've got a couple questions this week about that, so I wanted to address it. It's a basics question. Basically, you can pretty much Google what is a stock warrant. My favorite tool is just go to what is a stock warrant? Investopedia. Investopedia has some of the best information that's really written in simple layman's terms so that everyone can understand it. Definitely check that out if you have more questions on it. Otherwise, I think it's pretty straightforward. Anyways, so that's what I wanted to talk to you guys about today. If you have any questions, feel free to reach out to us, SpartanTrading.com, and have a great day. See you guys next week.